I don't think that it'll do anything to change whether or not we will get a cut. I think that the only thing that it can change is what the coalition of voters looks like. Basically, all of the data that we got today was pretty bad. We had layoffs, as reported by ADP in the month of November. We saw ISM services. Yes, it surprised to the upside, but it surprised because of slowing supply chains, like a very peculiar reason for ISM to surprise to the upside. We saw new orders that were weakening, employment that continued to decline in the ISM services report. We saw import prices that were flat, basically, so that gives a little bit of room for the Fed to consider cuts because tariff pass-through is slow. And the final thing that we saw was September's industrial production numbers, with manufacturing output basically flat. And so all of it just sort of points to this final Fed decision for the year, looking like it's going to be made by a pretty robust coalition. In my view, when we get the summary of economic projections in December, that's where I expect to see a lot of dissent and a lot of division among the committee.
You know, we've been talking to Joe Matthew on Balance of Power about USMCA, the trade deal that replaced NAFTA. You obviously follow the Canadian economy. I mean, in the past, this has been an important economy for the U.S. U.S. has been an important economy for Canada, excuse me. So how are you thinking also, too, about where trade is kind of settling between what has been really important trading partners for the United States?
Well, I think that the thing that's most important to remember from the Canadians' perspective in the context of USMCA is that Canadian negotiators are basically going to be waiting for the U.S. and Mexico to sort out trade and border disputes, trade and border deals. For example, how much security Mexico should be deploying to the U.S. southern border, before Canada actually gets to come to the table to discuss its own trade relationship. Right now, the average effective tariff rate on Canadian exports to the U.S. is in the low single digits, 3 to 4%.
So not really, yeah.
Because of how many carve-outs there are, and because of the importance of the U.S. as an energy export market for Canada. All the energy just flows through the United States. Canada is right now relatively content just to wait. The bigger issue for Canada right now is dealing with pretty lackluster domestic output and domestic demand. The labor market has softened materially over the summer. It looks like there's a little bit of a glimmer of hope there. Right now, it seems as though, trade is sort of normalizing. Of course, the second quarter was really, really rough.
Yeah.
And so we saw an outperformance in the third quarter, but trade balances are starting to normalize, and any sort of negotiation is just going to be on hold until the U.S. and Mexico can sort out their differences.
Okay, so just a realistic timeline for what that could be?
I think that in earnest, we're going to start seeing some important talking points rolled out in the second quarter of 2026. Of course, any sort of negotiation can be sped up by, let's say, Prime Minister Carney visiting the White House. He's already been to the U.S. now, I think, twice so far since he took the leadership role. But right now, I'm expecting to see some more definitive deal points getting rolled out in the second quarter of next year.
It's just kind of wild. I thought we're not done with trade. I know we're not done with trade, but it just kind of keeps, creeping back. One of the other things that we've been talking a lot about are retail earnings this week and over the last couple of weeks. Nation's retail companies continuing to report out earnings amid the holiday shopping season now underway. Stuart's going to stay with us. Want to get to, though, Tim, some of the earnings we got today.
Yeah, let's bring in Emily Cohen. She's Bloomberg News Consumer Team Leader. She joins us here in studio. So I'm a little confused about what's going on with Macy's because shares initially fell after the company reported earnings forecasts that disappointed investors, but now we're seeing them up 2%. What's going on with Macy's? What did we learn?
I mean, Macy's basically had a good report, solid lead up to the holiday season. I think the shares are volatile. I think the thing that brought shares down initially this morning was a disappointing profit forecast. And I think that speaks to, we had the CEO tell us this morning, a cautious consumer. So they're being, a little bit conservative with their forecast. I think that initially disappointed investors, but all in all, it is a pretty good report for the company. I think their stock's up 34% this year. So I think anything a little bit disappointing might pare back.
But an 8% swing from high to low is a lot.
It's a lot.
It's like a confusing investor or a confused investor. right?
Yeah, a little bit. Yeah. But I do think it comes on the backdrop of really strong performance this year.
Just throw Dollar Tree. They reported better than expected profit. They also raised their full year earnings outlook, and we saw that stock rallying in today's session. So a good report. And what does it say about what type of consumer?
Yeah, for sure. I mean, this is the kind of store that does well in this kind of economy, right? They said on their earnings call they're seeing middle to high income shoppers trading down to Dollar Tree. That's good news for a store like this. And it continues to paint this picture that we saw last week and the week before, which is this split screen picture of how the consumer is doing. Consumers are still spending, but they're looking for value and they're looking for places where the price is right. And Dollar Tree definitely fits in that better category.
So Stuart, come on back in here and just give us your take on how the U.S. consumer is doing in the context of the retail earnings that we continue to hear about. To Emily's point, consumers trading down, higher end consumers trading down. That's good news in an environment such as this for a company like Dollar Tree. We had Dana Telsey in earlier this week, and she basically said, listen, if you're offering something unique to the consumer, like if you're a Levi's, for example, if you have a marketing campaign that is unique, you're still able to bring in consumers. How do you characterize the environment?
It's interesting when I read, so of course, I think about the economy mostly from the top down, and I enjoy when I get to participate in a roundtable with somebody like Emily, who provides some insight about the broader economy from the bottom up. And what's interesting is when I see rotation to a lower end retailer like Dollar Tree, it speaks to the price sensitivity of consumers. And then when we look at some of the more macroeconomic data, we see that firms are struggling to pass through some of the costs of tariffs. A lot of firms are reporting that they're getting squeezed in terms of profitability. Again, this is when I zoom out to the macroeconomic level. We're seeing squeezed profits in the aggregate data because a lot of the cost of tariffs are sitting with those producers. When you have consumers that are especially price sensitive, it's just sort of a tenuous balance that you're walking in the economy. Now, it's no wonder why policymakers are going to be pushing for a rate cut, because you're hoping that looser credit conditions will help to alleviate some of the pressure that consumers are feeling so that you can continue to have that expansion. But right now, it's just characteristic of a sort of tenuous balance in the broader macroeconomy.
Yeah, I also feel like characteristic, and Emily, come on back in here, is that we are constantly hearing, even from retailers that do well, right? I think even Walmart, that there's like a cautious consumer out there. I mean, cautious consumers. So they're spending, but they're being careful. They're being cautious. They're making choices. They're trading down. Is that a fair narrative takeaway?
I think that's exactly right. And I think that's what we heard from Tony Spring this morning, where, Macy's generally, it's a middle to high income shopper, but around the holidays, they have more aspirational shoppers come in. Those are the people who they're seeing pull back, be extra cautious. And I think that's right.
So, before we wrap up, just kind of on the specifics, Emily, just real quickly, who else are we done from the retailers? And didn't we just have like a pretty impressive Black Friday and Cyber Monday?
We did. We had an interesting Black Friday, Cyber Monday. We don't really know the full results yet, and I think we'll see that. We have some more retailers reporting the rest of the week. We have Kroger tomorrow, Five Below, more
Ulta,
dollars.
right? Too, I think.
Ulta, exactly. PVH
today, yeah.
So we're still, the retail earnings season really never stops.
Yeah, all right. And then we'll get into the holiday results.
Yeah.
Emily, thank you so much. Really appreciate it. Bloomberg News consumer team leader Emily Cohn with the latest on retailers. Stuart Paul still with us talking about economics. I mean, there's a lot going on, and I guess we are just so focused about the Fed meeting next week. Is it all but done, another quarter point cut? And is it all then about what kind of color we get on 2026, and does it really matter because Fed Chair Jay Powell, we assume, will be on his way out?
Yeah, I think that the 25 basis point cut in December is a done deal. When I think back to October, we only had one dissent in favor of holding rates steady, and that was from Kansas City Fed President Jeffrey Schmid. So when, of course, the Beige Book came out, I was particularly interested to know what's going on in Kansas City. Is it possible that he would join the coalition of voters come December who would favor a 25 basis point cut? And Kansas City conditions looked quite a bit worse in the last Fed Beige Book. So I expect that there is this broader coalition forming for a December cut. You know that Governor Myron is going to vote in favor of more than 25 basis points in December. What's going to be a little bit peculiar, and we've seen this, we saw this last year in particular, is that when the summary of economic projections comes out with the dot plot, I would not be surprised to see other FOMC participants keeping their dots a quarter point higher than where we end the year. That's to say there are sort of shadow dissents among FOMC participants who are not voting, who would have preferred rates to not be lowered in December, even though the actual voters decide to lower by 25.
Explain why.
Yeah.
Because we have other FOMC participants who are not voters, and among those people are Cleveland Fed President Beth Hammack, Dallas Fed President Lori Logan, folks like that who are going to be voters next year, who were more hawkish in all of their public comments. They don't get a vote this time, but we expect that they would try to send a signal to the rest of the world, hey, we're not going to be moving at the same pace next year. And so when we see dots for 2026, I expect there's going to be a pretty wide distribution. I expect that the incoming cohort of FOMC voters from the regional banks are actually going to be quite a bit more hawkish in 2026 than they have been this year.
Are we nuts to be thinking, or for traders and investors to be assuming that Kevin Hassett is the next Fed chair? Because it does seem like all Fed roads are leading to him at this point.
It looks like that's going to be the case. It looks like it's going to be a Hassett nomination. President Trump was alluding to Kevin Hassett being the nominee when he had a press conference, I guess, just yesterday. There was a story from the Financial Times today that apparently in one-on-one conversations between bond market investors and the White House, some folks expressed concern, but then you look at the price action when the trial balloon was floated last week with Kevin Hassett's name, and he passed the financial markets test with flying colors. And so I'm less concerned about what folks are saying to the White House than what the market is saying to the White House. And the market is giving a clear go-ahead.
I don't want to put the cart before the horse, but if you're saying the market is giving the clear go-ahead, then what does the Senate confirmation process look like?
I think that what's different between, let's say, the Senate confirmation process for Trump's nominees this time versus in his first term is that, I guess you could say, the MAGA movement has coalesced and there is a broader coalition that is in support of President Trump's agenda. And so the division between the Senate Republicans, for example, and the White House is pretty narrow. There is not a lot of dissent among Senate Republicans in the White House. Every now and then you see somebody pop up like Mitch McConnell who has their own voice, but I expect that somebody like Kevin Hassett should make it through the confirmation process in the Senate Banking Committee pretty easily. And then it'll be mostly a party lines vote when it actually gets to the Senate itself, to the Senate floor. So I don't think that it's going to be an easy process. I think that it's going to be one where you're going to have some pretty dramatic headlines when he gets questions from, let's say, Senator Warren from Massachusetts. It's going to be a pretty ugly back and forth. But when it comes time to actually counting the votes, I think you just get party lines votes and he gets his shot, if that's what the White House ultimately decides to do.
And speaking of Senator, she's been outspoken. She wants lower rates.
Yeah.
That's right. This is always what's tricky, is that sometimes political partisans find a way to make sort of funny bedfellows. And yes, she does want lower rates, but does it come at a cost of politicizing the Fed as an institution? I think she's going to try to make it more difficult for him, even though they both might want the same thing when it comes to policy.